So Ally, when they first announced, the stock rallied like 4 or 5%. And then when it first opened, I think it opened up, I don't know, down 5%. Now it's recovering a bit, 2.46. Now I looked at their earnings and I looked a little closer than the two I just shared with you. And the reason for it is I started buying into Ally. And Ally is, let me go to their earnings because it gives us a good glimpse of who they are. So Ally started, for the most part, they were a part of GM, and GM had a financing arm. It was, I believe it was GMAC, and they ended up spinning that off. So the origins of Ally is the car finance business. And they started going into other businesses, but that's predominantly who they are. And they have grown that business nicely. They've grown to have more applications. They're kind of a dominant consumer finance company focused on car finance. And cars are a necessity in the US. This is where they operate. And car prices continue to go up. So the actual loans on those cars continue to go up. The business has grown on the auto finance side, and they've started a digital bank where they really attract depositors by providing a really nice rate of return. And that's gone quite well. So I treat Ally as kind of a bank, although they're a consumer finance company predominantly, but they do have this bank. They're trying to get into insurance, and I think they're beginning to grow. And then they do some other things, like they do a little bit of mortgage lending, not enough for it to be a big part of the business. Their results I thought were good. Their um, their finance business for predominantly their auto sales were okay. They actually, I think they decreased a bit. You can see these are actual dollars, I think in millions. And but what increased was other revenue. Other revenue, if you track that, it's really been expanding. I think that's where they're seeing some growth. I think diversifying from, away from just being a car financing company to have different, financial services and financial products is a really good idea. That way you can find markets where you can grow faster and you can be more diversified as a business. That way, if there's a downturn in car sales, the automotive industry, you're not kind of held to that downturn. You can kind of grow in other areas and probably deal with that downturn a little better. So in general, I thought the revenue growth was good. I believe they continue to be profitable. And if you look at, this is the most recent quarter here, kind of highlighted in gray, if you guys could see it. And their earnings per share expanded. So that's good. And one thing I wanted to note is we have decreasing interest rates. Let me make this a little bigger because that is kind of a nice chart. There we go. That's better. So one of the things I've liked about Ally is their loans out there on cars is at 9.29%. And we know that interest rates are dropping. So that just creates better net interest margin. And net interest margin is profit to a company like Ally. So that looks good. On their lease business, not so good, because I think they have to factor in depreciation because they actually own the car. They're just letting somebody lease it for 3 years or however many years they're going to lease it for. Commercial auto is probably loans to the dealerships so that they can bring in inventory, put it in on their lots, and then pay an interest rate on that loan. Corporate finance, mortgage, you can see that mortgage, the yield for mortgages is not very good because just mortgage lending is safe, but it doesn't do so well. Credit card, the yield is really high. I'm sure they want to grow that as well. So all these things to me, 7.3% looks pretty good when we're looking at, interest rates continue to drop. They're probably paying 3 to 4% to depositors. So that spread's really good. So I think that looks really good. I think that stock is really being discounted because I'm going to show it on this chart because it looks better. So when I look at Ally for the last 6 months, there was a big scare that, consumers are not able to pay their car loans, and the stock sold off 24%. And it caught my attention. I'm like, I know Ally, it's a good company. I've made money on Ally in the past. So can I make money again? So I started to track the stock. And I decided to start buying shares. I'm looking at the earnings. I think the earnings were good. And I'm going to keep buying shares because I think that this is going to eventually just keep going up. Over the last year, even though they dropped by that substantial amount, they're still up 35%. That's excellent. Over the 5-year, not so good. 14%. And I think we had the big downturn, coming out of COVID, they were just screaming up, and then they really settled down. But now the stock's beginning to move. I expect it's going to continue to move up and to the right. They, I think, are very well run. Cars are pretty much a necessity. And as consumers refresh their cars, buy a car for maybe the first time or whatever, they have to finance it, and they have to go to companies like Ally to finance that big purchase. So I think it's a pretty solid business that I'm glad to buy into them. I do like their dividend rate. I don't invest purely on dividend, but that's not a bad dividend, 3.35. It's discounted based on what analysts are saying, and I think it's discounted even better than that based on my own analysis. But Ally looks pretty darn good to me. I'm probably going to buy some more shares today. I'd like to build up a position, maybe of $10,000. I just started buying into them, and I'm not going to go off on the deep end too quick. I'm going to probably maybe go from right now. I have about $1,500, $2,000 in the stock. I'll probably go up to $10,000 and see how it goes from there. Looking forward, look at their earnings per share expansion. That is phenomenal. So that's looking pretty darn good, man. So yeah, I'm going to keep buying into Ally. I think that's going to be a good move for me. And I think the market they didn't like something in that report. I think they're finding reasons to sell off Ally. And they may be right. The investors might be right, and the stock, tanks. But I might be right, and I might make some money. I made money on Ally. I'm okay making money on Ally. I bought when they were like here, and then they rose really nicely, and I sold like here. Thought, okay, I made a good amount. What would be my exit strategy on Ally is probably be satisfied with like a 40% rate of return. Boom, get done. And I'd probably look at the environment, the economy, but it's not a stock that I think is going to be a long-term hold like a Meta or a Google Alphabet. It's probably something that's, let's use the advantage of the market selling it off, make a substantial amount, get out of the stock, put that cash back into the pile of cash, and look for the next opportunity. So it would be maybe a 1-2 year hold and then sell it at the right time. Everybody, welcome. Want to invite you to become a community member. Sign up, become a part of the community, and get more involved. We're going to have the first workshop tomorrow. And it's going to be a workshop to go over a few, I think, good areas of knowledge, and maybe help investors maybe look at financials a little better, maybe just kind of share examples of financials and go through them. To get to know a company is to get to know their financials. So I think that's always a good place to start. And each week we're going to be having just workshops, and it's going to be driven by member request. Like, what do you want to go over this week? It will be the topics. And then on Sundays, we do an investor call, which is good, healthy exchange of knowledge, ideas, what's going on, what's working, what's not working, type of conversation. If you want to be involved with that, become an advanced investor and you will be a part of it. So look for more details in the description of the live stream.